We believe that wealth is a journey, and that this is your jumpstart to trading success. Everybody, and welcome back to the Trader's Mindchat Show. I'm Mike.
And I'm Melissa. And no, this isn't a dating site. This is actually about trading, but we're going to be talking about how to cut a loser.
Oh my God.
A loser.
That's one heck of an intro. Okay, well, let's go. So here's how you cut losers. But seriously, I was thinking about this the other day because I started to remember that interview that we did with Siam Kid, where you have a trade that's a winner, and sometimes a trade that's a winner will back up into, and just kind of squat, right? Like it's been called squatting. It could be called like a winning horse that's backing up into the gate, and you want to cut those, but you don't want to cut a trade too quickly because you might be cutting a winner.
How do you know?
It's a great question. So the study that I'm starting to do now, going back through like all my trades from this past year, is to put the low watermark for every single trade, particularly the winning trades. So what's a low watermark? A low watermark is when, let's say you enter a trade at $100 and that trade falls to 97 before blasting off to 200, infinity, or beyond, right?
Thank you, Buzz Lightyear.
So that 97 would count as the low watermark. So what the stat that you want to do then is to go through all of your past winners and to see how far those past winners dropped while you were still in the trade, right? Like, well, what's the lowest price that it was from your entry point after you entered? What was the lowest price that it hit while you were in the trade? And that will be your quote unquote low watermark.
Do you see that in your software, or where do you actually see that low point in your trading?
Great question. So I have a spreadsheet that I track all my trades in. It's as simple as that. Like, so to start out, for everybody that's watching, like, you want to start out with some kind of a spreadsheet somewhere that you're tracking your trade. So your entry, your exit, stop loss, like whatever it is that you want to track, the more data, the better. And in there, that's where you would go back to the chart of whatever it is that you're trading, and then just see, like, okay, I entered at 100. What was the lowest price that it hit after I entered? If it was whatever it happens to be, you just jot that down, and then you can start to go back and see, well, on average, right? And then that's getting to the point of doing this exercise. You want to see, like, well, what's the average that price falls on your winning trades? What's the lowest watermark? Like, what's the lowest point that your winning trades hit? And I also like to look at it in terms of R multiples as well. And we could talk about R multiples too. But what's the lowest that price falls before, on average, before taking off? Because then that allows us to say, okay, you know what? Like, I entered at 100. On average, a winning trade won't fall more than 3 or 4% after it breaks out. It'll help you cut a loser faster, right? Like, because some trades will break out and then they'll come back in and then they'll kind of futz around for a little bit and then fall off the table. And it's those that we want to figure out how to eliminate faster. Like, and Stu and I actually did a talk about this recently too, that there's 5 things that a trade could do after you buy it.
Okay, what are those 5?
All right, so thing number 1 is what we all hope for. It goes straight to the moon. Thing number 2 is that it's kind of a gradual increase in price. Then thing number 3 is it goes sideways. Number 4, it's a gradual decrease down. And number 5 is it just drops like a stone.
And so these are the 5 things that a stock can do.
Yeah.
Okay. So when you have those 5 things, so and you're watching it for this particular trade that you're analyzing, and it hits that watermark, that low point. How do you like determine that? Okay, let me just cut my losses here, because what if it does go up again? Like what? And you're afraid like that will happen with that particular trade.
And that's what everybody's afraid of. It's that fear of missing out.
Yeah.
Right. Like that's the big buzzword that everybody talks about, like the fear of missing out. Like, oh, like I don't want to cut this loser because like what if it rallies in my face and then I feel like an idiot?
Yeah, then you regret making that decision.
Right. So if you're tracking your trades and let's say you've got 100 trades on the year, right? And the more trades that you have that you're looking at, the better. Like if you're starting out and you have like maybe 20 trades or 50 trades, start with that. Like that'll give you a decent sample size, but the more you have, the better. So look through those trades, and for the winning trades, you want to see like how far does it go back into against you before rallying, right? Because if let's say you've got your block of winners and the majority of them fall maybe 3%, 4%, like after it breaks out and then it just comes back in, right? And then all of a sudden your winner is at a loss, but then it soon rallies. So you'd want to say, okay, on average, it comes back X amount. So if it starts to fall more than that, then okay, most likely this trade isn't going to rally back again and become a winner.
All right, so do you have an example of one that you cut that one that maybe you regretted cutting it too soon, or B, that you were glad you cut it when you did?
Great. Glad you asked that. So there's 2 recent trades that I was looking at that kind of sparked this analysis. One was Square, and the other one was Shopify. Both of them broke out recently, and recently, well, what's today? Today's the 10th, September 10th. So broke out, and then it just kind of like futzed around, and it was kind of like giving technical reasons to stick with the trade, and then maybe about 4 or 5 days in that they ended up triggering a full stop loss, and it's just like, well, what could have been done to exit these trades a little bit quicker? And then it sent me on this path of trying to figure out, well, like what's the average that a trade will come back in before rallying? Right, like so if you're in a swimming pool, right, and I've heard this analogy used before too, and you have a basketball and you put the basketball underneath the water, it should pop right back out, right? So how far down into the water should you be able to push that ball before it like pops you in the face? Right, like that's kind of what we're trying to figure out here.
I'm picturing this basketball hitting you right now, so that's pretty funny.
Thank you. Yeah, well, like, and that's kind of the principle, right? Like you don't want to allow it to go down too far because it'll blast you in the face. So like if it is going to be something that pops right back up, then what's appropriate.
Okay, so for Square, for example, was there anything else that could have caused it to bounce back in a way, like maybe there's earnings, or maybe there's reporting earnings, or something different is happening in the company? Are you looking at any of that, or are you just looking at that average?
I'm just for this exercise, I'm looking at the average, and part of going into it too, right? Like, is the mindset component of this, right? Like I see everything as mindset related, and mindset is not just like happy feeling good feelings like that. Like mindset has to do with like understanding like your approach, your strategy, your understanding that trading is about probabilities. So if you look at, and this is where looking at all the past trades come in, and if it's just like, okay, on average, and I've got a large sample size, on average it doesn't fall by more than X, then you're able to say, okay, if it starts falling significantly below that, then uh, chances are great that it's not going to recover, right? And so it's giving you like one more thing to help make that decision of should I cut this loser or give it a little bit more room. And at least from that point, you're doing it from a conscious level, right? Like that's another part of mindset, like awareness of like, well, what's happening in your trades from your own stats, right? And if you're not tracking your stats, then you're kind of oblivious. So generating greater awareness, tracking the stats in this way can really help improve results by allowing you to kick the loser to the curb. Right? Like, yeah, like if you're dating somebody and it turns out to be a loser, like should you go on like 10 more dates or should you like
kick him to the curb?
yeah, like well, what if you could kick that loser to the curb on day 1 or day 2?
And you can find like your real match yeah, day 3. Yeah, if you keep putting yourself out there. Very good analogy.
All right.
All right, great. So, like I said, some of this still goes over my head, so I'm sure for some of you, hopefully, this does translate better.
So put your questions in the comments, please.
Yes, it sounds like it really comes down to numbers and probability. I think that's what it comes down to. Like I'm still in the mindset. I think there's all different styles. Is that looking at the company's earnings, like seeing how things are going, but you primarily are looking for your style is primarily looking at the highs and the lows of where it's gone historically.
Right. So from the perspective of someone who is trading a little bit more frequently, that probably has over 100 trades on the year, like probably between like 150 to 200 trades on the year. If you're doing more, then you're going to want to do even more of this kind of statistical stuff. If you're trading less frequently, let's say you're longer term and maybe you have like a dozen trades for a year, then it'll be hard for you to get these kind of stats. But at the same time, you still want to have some point where you know that things are not right, and you would want to kick the losing trade to the curb.
Do you recommend asking somebody for advice or like before you make that decision? Because maybe like you're trusting your gut, but you just really want that other like accountability partner. Like, do you have something like that? Like, do you like when you're like second guessing, like, should I cut it too soon or not? Like, how do you handle that?
So for me there's a few ways to answer this. For me personally, like I think that gut feel is a very important thing. Like a lot of people tend to think that why trust your gut, your emotions, like maybe it's indigestion, but I think that developing your intuition is a very, very important part of trading because so much of decision making is based on like being in a flow state. So you'd want the way that you're going to be able to trust yourself to make good decisions is to continue to make decisions, not being fearful of, or rather expecting that sometimes your decisions won't work out, but to then have a process in place where you're going back and looking at like, okay, like what could have been done better here. And that's like how you're starting to spiral up instead of like spiraling out of control.
Maybe this is good for journaling too, where you trusted your gut in this one example where maybe it actually was fear that dictated. So when you go back through your journal, you can kind of see like how things actually panned out for that particular trade. So the next time you start feeling this way, like be like, hey, is this fear or is this actually like I'm trusting myself? I'm more knowledgeable now because I've done that back testing that I have a better sense. Because you've done this countless more times than a beginner has, so you can trust your gut and those feelings better than someone who might be just acting out of fear or I don't want to lose all my money. Oh my God, I just put $10,000 on this. I don't want to lose it. That was my house money or going toward my mortgage or
right.
And so for that, I think you're right. Like maybe it is good to have like a second opinion maybe or maybe talking it out. Like, I know you have the Discord room. Maybe that's part of the reason where you kind of can feel things out in that room with other people who are more knowledgeable.
And that's part of it too, right? Like, so for somebody else that might not have the same level of experience, like, yeah, like, uh, you wouldn't want to just go to anybody,
Mm-hmm.
right? Like, you would want to go to people that you like, know, trust, trade in a similar manner, right?
Mm-hmm.
Like that's part of the purpose of the Discord room, so that way people could come and ask me, like, hey, like, well, what do you think of X, Y, and Z ideas that I have? They could ask Stu. They could ask any number of the elite members that are in there, that because we're all trading in our own way, but we're all looking at the same kinds of things, so you could get different perspectives and, yeah, like, ask your community.
That's great. Yeah, no, just because yeah, thinking from more of the beginner perspective, like yeah, that would be something that would make me feel better, especially if I am going to be cutting my losses, and then with that fear of missing out. I think that's another thing too. Like, what if it does go back up? Maybe I just don't know, or I don't trust my stats enough, or I don't have enough stats to look at.
Well, that's one of the things that we talk about in the room quite a bit too. Like, if somebody says, like, hey, well, what do you think of this trade? It's not just like, oh, well, here's what I would do, so go do that.
Mm-hmm.
Like, I'm digging deeper whenever somebody asks that, to try to find out, well, what's the intent?
Mm-hmm.
Right? Like, so the answer for what somebody should do if they're looking at a trade long term, like to hold for a year or more, is going to be very different from the person that is looking at this to hold for a couple of weeks.
That's true, because the person who's looking to hold it longer, they probably have the stomach for these type of ups and downs a little bit better than someone who wants to make those quicker decisions.
Right, exactly. Well, with Bitcoin, for example, the extreme case last, I think it was this week. This week, there was a crash, and Bitcoin was down maybe about 20% in the span of about an hour or so, right? So people that were short term would be panicking, right? And there was plenty of articles about, like, oh, like, you're logging into Coinbase, logging into Kraken, or any of these other crypto brokers, that they had some difficulties and they were down for a period, because, like, everybody's flooding in trying to place orders, get me the hell out of this thing, and there were a lot of problems that way. Very different perspective from somebody that's doing something that's much longer term. They might see something like that as a buying opportunity.
Mm.
Right? Like that's kind of
Yeah.
like, so for me, for crypto, like, I'm much longer term. So I'm seeing that drop and seeing, like, oh,
Oh,
like,
I could buy more shares.
yeah, right? Like,
I don't
not
know
just
if
because, like,
shares in Bitcoin. I'm
well,
not sure.
well, no, like, yeah, like, buy more
Yeah,
Bitcoin,
buy more Bitcoin.
but it's not just like, oh, look, a drop. Like, it's like going, looking at the chart, looking at all the other stuff that I look at, and saying that, oh, this might be a good low risk, high reward opportunity.
Mhm. So you have to be very clear about
Yeah, so,
how you're trading.
yeah, gaining clarity on your objectives, goals, decision making, like, all that stuff is super important, and that's what we do with in the Discord room and with the elite program.
No, I love it. I love it because I think that for me, like that's the first step is to really become more clear about how I would go about trading these different yeah, different stocks. I think that's the
Right?
first step
Yeah.
for me. But for anybody else who has been doing this for some time is to yeah, really take a look at their stats, really see like when those highs and those low points are historically, find the average, and then yeah, cut those losses when you can so that you can then, like I said with the dating analogy, find those winning
Mhm.
trades or that winning match that you're going to be happier with.
And one thing about that too is that, because I think that uh, people could get fearful of, like, thinking, oh my God, I'm listening to this, and there's too much, get overwhelmed, and then just not start. Right? Like, I think that the answer is to start, but to start in a small way, start in a simple way, expect to make mistakes, and, like, that's part of the learning process. Right? And so when you are starting out, you shouldn't be trading with money that you can't afford to lose. Right? Like, think of it as your tuition fees, right? Like, how many courses did, I don't know about you, but, like, how many courses did I take, like, for my undergrad and in grad school, that I'm not using right now, right? But like those are tuition fees that I had to pay to go through school. So same principle here. Like this is your tuition. Like those any kind of losses that you're experiencing, it's tuition fees to the market, provided that you are going to learn.
I think that's great. And yeah, no, write below in the comments what your thoughts are on how are you analyzing your winning trades or cutting those losses. We'd love to hear from you. And yeah, don't forget to subscribe to the channel. We have more great interviews and shows lined up, and can't wait to see you there.
Yeah, how can people get a hold of us, like if they're listening to the podcast? Yeah, that's
Go to Marawealth.com. We have a contact section.
Yeah, that's
Contact
right.
us through Marawealth.com.
Yeah, there you go. Don't forget about that
commercial. Go to Marawealth.com. I'm sure Michelle will put something on the bottom here. Thanks, Michelle, our lovely editor.
All right, so
She doesn't put up with us, as do you. But hopefully this has been helpful. And for those beginners, like don't despair. Like I'm in the same boat, and we're gonna get there. And with Mike guiding us, we're gonna get there faster. It was great.
all right, thanks so much, and take it and run with it.
See you soon. Bye.
Bye, everybody.